Today we're going to learn how to construct an uptrend line, and the example I'll be using is Nasdaq daily chart. So after the program today, you can use whatever is taught here to apply to other markets as well. So there are three parts for today's program. Number one, the rules of drawing an uptrend line. And there are two keys. Number one, trough to trough, and number two, the significant points. And part two, what is the price behavior telling us? So we're going to apply what we learned in part one to part two. Exactly at the current market, what is the price behavior of Nasdaq telling us in the next few weeks or month to come? And we're going to apply on the technical aspects to the fundamental aspects. Whether if the current development, the events, it is in line to what we're studying technically. What presented here is not a recommendation. Please consult your licensed broker. Our mission is to create lateral thinking skill for every investor and traders, knowing when to take a calculated risk with market uncertainty and a bolder risk when opportunity arises. Rule number one, trough to trough. Now, this is a Nasdaq daily chart. Now, whenever we draw an uptrend line, we focus on the bottom part, the trough. Not on the upper, but the bottom. Now, what do I mean by that? This is one trough, two trough, three trough, four trough. We try to look for a trough that they are meaningful. And later on, I'm going to explain to you what do I mean by meaningful trough. And this is another trough. As we connect the trough and the dots, it forms this very respectable uptrend line. And many of us will make a mistake by joining the peaks of the market. For example, like this, one peak, two peak, third and fourth, and you draw a uptrend line, thinking that this is an uptrend line. No, it is not an uptrend line. Now remember, on the uptrend line, you look at the trough. You focus on the meaningful trough, not the peak, unless you want to draw an uptrend channel, and that's a different story. Now, so that's rule number one, trough to trough, to draw an uptrend line, not peak to peak, but trough to trough. Now, how about rule number two, the significant points? Now is this. Now, how do we identify that this trough is of great significance? In an uptrend line, before it reached the significant trough, usually, and that's the rule, that it must come after an retracement. Now, with an retracement, and it started to bounce up, and this became a significant point, which I will classify that as a significant trough to consider as one point of reference. Now, so this is a trough, and we could look across this uptrend line since year 2020, after July, around that period, to current. That before the significant trough appeared, we saw retracement followed by a quick rebound. And all these became a significant trough that we can consider to use them to form an uptrend line. So what is the price behavior of Nasdaq daily chart telling us for this example? Now, if I'm going to project this uptrend line a bit further to my right, and I could see that this uptrend line was broken in the month of January 2022. The market was down 18%, and it has broken this uptrend line technically. So whenever I use a daily chart, weekly or monthly, that I will also try to include the events, the current events, the past events, the development of the market. This is what I call the fundamental or macro analysis into the picture. If I see that something that's happening technically, I would also include what is happening fundamentally, especially when I'm analyzing from a daily chart perspective and beyond. Now let's look at the chart that we examined earlier. So we're quite convinced that this uptrend line, this beautiful uptrend line or uptrend market has been violated, has been broken. And now let's look at fundamental. Now, since 2021, Fed have said that the inflation pressure is transitory. And let me explain by what do I mean by transitory. It means this, that after lockdown, after 2021, shopper go back to street to shop, and workers go back to their job, and wage increase. So Fed identified that this inflation is short term because of the opening up, because of the beginning of the opening up of the economy, so it's short term. But something have changed in December 2021. They say that inflation, it is not transitory. And this is what they say here, that inflation pressure is here to stay. Now, what is the number one enemy of stock market? It is the interest rate hike, especially if interest rate hike is going to be continuously moving north. And that's what we see here coming March. Some say that this year maybe 3 interest rate hike, some say 4, I read 5, some say even 7. So definitely the pressure is there. Now let's go back to technical. So technically we have studied that perhaps this uptrend line has been being challenged technically. And fundamentally it is kind of confirmed what we have seen technically. Now, so moving on, this year 2022 is going to be a very challenging year. If you're going to ask me that if the market is going to resume its uptrend, breaking the last quarter of 2021 high, and my reply to you here is that based on the study will be technically be quite challenging, because this beautiful uptrend line has been broken, and fundamentally it kind of confirmed that as well. So keep track of the development for the next few days, for the next few weeks, or the next few months, if the market is going to break the January low. Because if it's going to break the January low, it may alter the dynamic of this uptrend that we're seeing now, and perhaps downtrend may be in the making. We just got to keep watch very closely in the next few weeks or next few months to come. Like or follow my Facebook page for my daily insight of the market. And if you like what I've just shared, subscribe to this channel, invest and trade with insight. And remember to turn on the notification bell so you will not miss any of my latest video. Thank you for staying true. See you again very, very, very soon.